And if all this feels totally overwhelming, just go to your tax preparer and say, hey, I heard about something called a foreign earned income exclusion. Help. Some people have never been a contractor, never had a 1099 before. How does that work with them as missionaries and filing their taxes?
Most people that get 1099s are independent contractors, and a missionary can be considered an independent contractor. Kind of the way it's looked at is who is kind of in control of what you are doing, and what you do as a missionary over there is up to your discretion. I mean, you are deciding what you're doing every day. The company is not telling you, you need to be out and doing this every day. And as an independent contractor, you pay self-employment tax. So that kind of is a main difference on your taxes. And that's what can hit people kind of hard, the extra tax in addition to the federal.
And that's such a great point, because for people who have been used to getting a W-2, who've been working as a normal employee, if they get a 1099 for the first time and they don't remember they need to pay in taxes, that can be so jarring. Welcome to this episode of the Modern Day Missionaries podcast. In today's episode, which I just finished recording here a few seconds ago, we talk about one of the topics that's been most requested from our missionaries, and that is on taxes. We talk with CPAs Maggie Walker and Brooke Calhoun, and we pick their brain not just on taxes, but also on Social Security, on housing allowance, the types of questions that missionaries have when they go overseas. I remember that was our personal experience when we went overseas. So we asked the big questions. Do I opt out of Social Security? What happens if I do? What happens if I don't? Do I get a housing allowance? How do I qualify? What does that look like? What benefits does it give me? How can I reduce my taxable income while on the field? How do 1099s work if you've never done those before? We go into so much. There's a ton of great information today. So you're going to want to take some mad notes. And we are believing this is going to be helpful for you, not only with tax season just around the corner, but really as you plan for your financial future and get yourself or your family set up to be able to thrive financially on the field. So get ready for today's episode with Brooke and Maggie. Hey, Brooke. Hey, Maggie. Thank you so much for coming on the podcast today.
Well, thank you. We appreciate you having us on to talk about fun things like taxes.
Oh, my goodness. I know. You know what? This has actually been a hugely requested topic from our missionaries. Like, we've been waiting. We were like, who can talk to us about taxes? So when we connected with you guys, we were excited. I know it may not sound as exciting as some of the other juicy topics we've hit, but taxes is what people want to know about, especially this time of year. We're releasing this right before tax time when everybody's thinking about it. So you guys have answers that we want to know. So can we just jump right on in? Because this is your background. I mean, this is what the both of you do. I should ask, how long have you been working in the accounting tax life?
Well, I have been doing it for over 20 years, so it's been a while, but I've always had a computer, so that's good. I don't go back, pre-computer, so I can't imagine having done it then.
Oh my gosh, no kidding.
I've been in accounting about 6 years and then doing taxes for 4.
Well, and I love that you guys have both worked specifically with missionaries. I remember when I was on the field, this was a huge frustration for me. I didn't know where to go. I didn't know what to do. Now, thankfully, the tax person we worked with was so kind. He'd never done it before. He kind of just learned it all on his own. But it was a headache. And so the fact that you guys specialize in this and have done this for so many missionaries is really reassuring. We should say, too, as we get started, I know we were all talking beforehand, you guys are going to give generalities in terms of answers, things that apply kind of overall to expats, people living abroad. But for everybody who has specific questions, you're going to need to talk specifically with your tax person. So Maggie and Brooke are not accountable. You can't quote them and say, like, Maggie and Brooke told me, I heard it on the podcast. They're doing the best they can to be as general as possible. But for anybody who's done taxes, it's not general. It's very specific, and there's loopholes, and there's this and there's that. But we are going to hit big topics that will be helpful. And not only are we hitting on taxes, we're going to talk a little bit about housing allowance, about Social Security, all kinds of stuff. So get out your pen and paper. This will be a note-taking day. First question, do you need to file a U.S. tax return if you're living abroad?
Yes, you do. For the most part, there would be, If you had like an income, if your income was below the threshold, you wouldn't necessarily need to file. But for the most part, yes, if your income is above the threshold, then you will need to file a U.S. tax.
Yes. And do you know what that threshold is? I thought it was about 20,000 is what I had seen. Is that right?
It's probably a little bit lower than that. I mean,
Yeah.
it goes up a little bit every year, but
Mhm.
it's probably around between 12 and 14,000.
Okay. So that's something that someone can look up. So if it's below that, then they don't need to. But for the most part, people will need to. And if you aren't raising that much, we want to just encourage you at Modern Day. You can do it. Fundraise for your family. We believe that God will provide for you. Okay, and I did this wasn't in my notes to ask you guys, but I was actually doing some research myself yesterday and found out something about amnesty. So for people who maybe haven't been filing their taxes for a while. So if somebody's listening and freaking out going, I haven't filed my taxes in 5 years, I'm going to get in big trouble. There's a way to kind of retroactively do that with some type of amnesty rule. Is that correct?
Yes, there is. And I don't know the specifics on when that ends or cuts off, but there is a process right now, and I think they call it streamlining, where you can be behind several years, but you can go through this process and only have to file the last 3 years, and they will consider you caught up. I don't know when that cuts off or ends. I have not done any of those for any clients, but I have a new client who just went through that process. And I know he was
Okay.
9 years behind, and he went through the streamline process and filed 21, 22, and 23, and now he's considered completely caught up.
Okay, nice. So hopefully some people are breathing a sigh of relief. There's a way to catch up. It's not the
Yeah.
end of the world if you have not been paying your taxes. Be a
Mhm.
responsible citizen. Pay your taxes.
That's right. That's right.
Okay, what that filing deadline of April 15th, is that the same for expats? Just like it is for people living in the US?
Well, expats actually have an automatic 2-month extension, so they would be due June 15th. We don't, we try to handle those people the same as we do our other clients, just extend them at April 15th if we're not filing, just because it's a little one-off for us and I don't want anyone to fall through the cracks. But the official answer is that they have an automatic 2-month extension, so they would not really be due until June 15th. But if they do
Okay.
extend, then they can file through October 15th, and that is the drop dead deadline. There's no extension past that.
So just think it's still April 15th, knowing you got a little bit of wiggle room. And then if they want to go farther, file another extension.
Yes,
Mhm.
but we usually, for our missionaries, we file their extension at April 15th, just so we know it's done. But
Yeah.
they do have a little extra time.
That makes sense. I know we always had somebody helping us do ours. I did our taxes, I mean, way back in the day. But I would say once we went overseas, there was just rules that I was not aware of that I think would be hard to know. And we'll lay out some of those today. But yeah, taxes were not designed to be easy, unfortunately, in the US. And I should have said this at the beginning, but we are talking about US taxes because we are all American citizens and that's what we know. And that would apply to a lot of missionaries listening. But for people from other countries, you've got your own set of rules. But there are some special tax benefits that are available for US expats, correct?
There is the foreign earned income exclusion, and there's also foreign tax credit if you've paid tax to another country. And like you mentioned, we're only talking about US taxes, but there could be circumstances where a missionary is living in another country and they are subject to filing a tax return in that country, possibly as well. And so if they do pay tax in another country and there is an agreement between them and the United States, it's possible that we could take a foreign tax credit on their tax return. And usually, we evaluate that in addition to the exclusion, and it can be a combination that's used on the return. And, obviously we try to use the most beneficial combination to reduce the tax as much as possible.
Yes. Okay. So if you are a missionary paying taxes in the country you're living in, that's something that's worth looking into. And then what was the other one that you mentioned? There was
and that
some
would be
type
the
of
foreign earned income exclusion, because there are some tests that you have to pass to be able to take that. And there is a maximum to that. For 2023, the maximum exclusion was 120,000. So if your income is higher than that, that would be an example of where possibly you would take that, and then you could, in addition, take the tax credit for foreign tax paid. I mean, you can take it even if you're not maxing out, but you just have to look at what would be the most beneficial combination of those two things. But yes, you do have to either live in another country for an entire year, or you can have 330 days out of a 12-month period that you're out of the country. And then you would also still qualify for the foreign earned income exclusion.
Mm-hmm. So the foreign earned income exclusion, that's income that you're not necessarily making from the country you're living in. Like you could be working as a contractor for the United States.
Correct.
Yeah.
You're
okay.
Just,
and that's
you're earning it while you're in another country.
Perfect. That's what I wanted to clarify.
From another country. Yes.
Okay.
Correct.
So foreign income exclusion. Yeah. Well, and it's so complex that I'm trying to think as simply as possible so that we don't, so people are able to clearly understand what we're saying in this. I don't want to muddle up any of your answers. So the foreign income earned exclusion, did I say that right?
It's foreign earned income exclusion.
So the foreign earned income exclusion is when you are making money as an American citizen from a company in the U.S., like working as a contractor or as an employee. So you're being paid from the U.S. while living in another country. Mm-hmm. And that's a way to reduce your taxes, right? Your taxable income.
You can exclude a certain amount of that income. So yes, it reduces your taxable income in the U.S. It does not reduce self-employment tax. So that is something to note. It only affects your federal tax.
Okay. And if all this feels totally overwhelming, just go to your tax preparer and say, hey, I heard about something called a foreign earned income exclusion. Help.
Yes.
That's all you need to know.
Does that apply to me?
Yes. Does that apply to me? And that big one is making sure that you're living enough days outside mm-hmm. of the U.S. because I know that we were always counting our days. Were we out of the U.S. long enough? Where were we? Because if you don't hit that right threshold, then you don't apply for it. And it's a huge tax benefit. So yes, consider how many days you are in the U.S. and outside to make sure that you qualify for that. That's a big one.
Yeah.
Okay. So at modern day, I know we issue a 1099. And I'm sure a lot of other missions agencies and places do as well. Can we talk about that a little bit? How does it work? Some people have never been a contractor, never had a 1099 before. How does that work with them as missionaries and filing their taxes?
So most people that get 1099s are independent contractors, and a missionary can be considered an independent contractor. Kind of the way it's looked at is who is kind of in control of what you are doing. So you would be independent if, whoever is paying you is just kind of not funneling your money, but they are collecting your money for you and paying it over to you. And what you do as a missionary over there is up to your discretion. I mean, you are deciding what you're doing every day. The company is not telling you, you need to be out and doing this every day and everything like that. As an independent contractor, you pay self-employment tax. So that kind of is a main difference on your taxes. And that's what can hit people kind of hard, the extra tax in addition to the federal.
Okay, and that's such a great point because for people who've been used to getting a W-2, who've been working as a normal employee, if they get a 1099 for the first time and they don't remember they need to pay in taxes, that can be so jarring. I mean, I remember for us even, when we moved back to the U.S., so we didn't have the foreign earned income exclusion and we had 1099s. And I mean, it kicked us in the teeth. Like, I don't think it really hurt too bad when we were overseas because our income wasn't large enough that, we had to, I think, pay much, if anything, in taxes. But once we came back, then you don't have that exclusion. Your income isn't being reduced because you're not living overseas. Mm-hmm. But even still, for a missionary, if you're getting a 1099, make sure you're setting aside money to pay your taxes. And you can pay that in quarterly, you can pay it in at the end of the year. But if you don't set that aside and all of a sudden you get a tax bill, it can just feel super discouraging. You can feel even like angry or upset. And that's just how 1099s work. So if it's your first time, set your money aside. Anything else would you guys add to that?
I would say it would be wise to think about making quarterly tax payments with it and not saving it all year, but make those payments in quarterly. And also keeping track of your applicable expenses that you can use to reduce your income. And that's something that, I think is easier to do throughout the year rather than waiting until the end of the year to try to recreate what happened. Because I feel like people that do that end up not remembering everything. So they're not benefiting as much as maybe they could from the expenses that they could deduct from that income to reduce their tax.
Okay, great point. And if they want to know how to send in quarterly taxes, talk to your tax preparer. I know mine helps me, and they can help you figure out how to do that. Say a little bit more about recording expenses and how that could be helpful.
I mean, this is one too that I feel like depends on what the missionary is doing. Like
Yeah.
a medical missionary is going to have way different expenses than someone, that's in a more general area of missionary work. But anything that is applicable to what you're doing, I mean, when you're buying supplies or things that you're using to share the gospel with the people in your area, it's just going to be, sometimes it's going to be food because you're having people over to do Bible study or something. It's just going to be, and travel expenses. In some countries people are using public transportation. It could be just a wide variety of expenses, but you want to capture every one to make sure you're not paying too much tax.
Absolutely. And same thing, you can talk to your tax preparer, or you can Google, and there are some resources and great articles out there about the types of things that you can claim or record as expenses. But yeah, I remember when I found out travel, because the four of us were going back home once a year, and I was like, oh my gosh, we can claim those as expenses. I mean, all those things add up to reduce the taxes that you have to pay in. And you don't want to claim something that's not, or say something that's not accurate, but on the same token, there's a lot more available, I think, than we even realize. So we'll look for some of those links too and post those as well. But yes, keep track of it. It's like
a lot of expenses that probably are missed because, I mean, when you're in another country doing missionary work, there's so much of what you do every day is going to be related to why you're there and what you're doing.
Yeah.
You can deduct a lot of that. So,
and it's a ton of work. I mean, I won't say that it's not. I mean, so having a Excel sheet, I mean, if you're married, pick one of the two of you who could be the Excel sheet person to jot it all down. If you're single, it's all on you. You got this. But it feels like a little part-time job sometimes, keeping track of all of those things, but it really it's worth it. It's super beneficial in the end, and it gives you a good sense.
Yeah, the earlier you start tracking it and keeping up with it throughout the year, the less daunting it is, because it's hard to, even if you sit down in June, it's hard to think back on 6 months of what you spent your money on.
It is. And this episode's airing near the beginning of the year. So if you haven't started yet, go for it right now. Catch up from January and a bit of February and Google it right now and start keeping those expenses.
I mean, all my clients business clients are, and this is like a small business, is to keep a separate bank account so that all of your income and expense related to your missionary work are all contained in one account. It does, if you do get behind, it makes it a little easier to find it all if you're running it all through one account.
It's a great idea.
And then I don't know if we're talking about this or not, but I thought about that an FBAR is a form that needs to be filed if you have a foreign bank account or any investments over $10,000. That needs to be filed as part of your return as well every year. So, and as $10,000 gets to be not as much as it used to be, there are several people who have that, and need to file that form with their tax return.
Okay, and that's good to know. So if you're going with your, if you're a new missionary and you're going with your regular tax preparer you've always had, and they've never done something like this, there's a ton of things they're going to need to know about and research. And they can, if they're the type of tax preparer that loves to learn all these new things. Otherwise, I would say it is a great idea to go with somebody who has this type of experience, because I know a lot can get missed. Things like this, the FBAR, the foreign earned income exclusion, all those things. In all of this, does it matter what country somebody's living in, or because it's the US, because people are from the US we're talking to, do all those same rules apply just kind of generally? Or I guess what are the differences with people living in different countries, or are there any?
It does matter. And there are some like agreements between the US and certain countries that may benefit filing situations where you don't have to file something in the other country because there's an agreement between the US and that country. So that's one situation that you want to find out where you are if you are required to file anything. As far as the US filing, it doesn't matter so much where you are, but if you have to file in the other country, it will make a difference, because some you're not required to file and some you would be required to file, like possibly if you owned property there, you're required to file a tax return, or it's just different for every country. That's just an example of one that I've seen. If you own a business in that country, like I know one missionary that we do their tax return for, the spouse has a business there, and so they are subject to filing a tax return in that country. And so we get that tax return from them every year, and they get foreign tax credit because they've paid some tax there. And there is an agreement between the US and that country, so they get that benefit. So yeah, it does matter. It's hard to answer not generally, because it can vary so much depending on the country.
And probably it sounds like the more involved you are in that country in terms of owning businesses or property or vehicles or things like that, that's what will kind of add to that complexity. Whereas if you're not necessarily involved too much in the purchasing things or owning things there, maybe it's going to be a little less complex.
I think it would be less complex as far as filing a tax return, but there may be other things that you're subject to, like if you brought a certain value of items with you, you might have to pay tax on that when you arrive, or something like that.
Yeah, and this is where I'll throw in, it's really valuable to be connected to the expat community in the country that you live in for a variety of reasons. It's good to be connected with other missionaries. It's good to be connected just with expats in general, because they know things that you don't know, and you can get a lot of good insight with some of the specific nuances of the country you're living in. So find a Facebook group if you're on Facebook. If you're not on Facebook, I know I'm not on Facebook. Just start making connections and meeting people and looking for meetups, because you can get valuable insight from other people who live there.
Definitely a benefit to listen to other people who have experienced the things that you're going through now or may experience in the future.
Okay, let's transition and talk about housing allowance now for a minute. And it's not a complete transition, because housing allowance plays into taxes, but it also can feel like kind of a separate issue in people's minds. How do housing allowances work? Who should take them? Who can take them?
So a housing allowance, you do have to be a minister to get a housing allowance. It's a great tax benefit because it is housing. However much you get for housing allowance is federally not included in your income. So it's not included in your federal income. If you ministers also have the option to opt out of Social Security, which we will probably talk about later. But if you are opted out, or if you are not opted out of Social Security, the housing allowance is still, you have to pay self-employment tax on it, but it saves you a bunch on the federal tax side. A big point I like to tell our taxpayers is if you are getting a housing allowance, let's say you're getting $10,000, for instance, you want to make sure your housing expenses cover that $10,000. If you only had $8,000 of housing expenses, then technically that extra $2,000 would be considered income, and then you would have to pay some federal tax on that. So you would lose a little bit of the benefit there if you're not covering all those expenses.
Okay. Okay. So, first step, make sure they're a licensed minister, whether that's with their church, whether that's with their missions organization, and like officially, like the church can't just be like, oh, hey, you're a minister. And churches know this. I mean, you have to have official documentation proving that you are a licensed minister.
Yes.
From there, you're determining your housing expenses. How much am I spending a year on rent or mortgage or, I mean, everything that it costs to maintain your house, electricity and water, all of those things, gas. So you're adding all that up. And then there is another nuance to it as well, where I think if you own a home, it's something like seeing what is the rentable value of your house. Like it can't exceed a certain amount. If the government sees that you're like, I'm declaring a $100,000 housing allowance, I mean, they're going to be like, hey, really? Is that what you really could rent your house for? So again, Google that, look it up, but determine what is a reasonable housing allowance. And then you submit the paperwork on that to the organization who gives you your licensed minister papers. And they have to approve that and be like, hey, we also think that's reasonable. And then, like you're saying, Brooke, you got to make sure you're actually spending that money. If I say I'm declaring $20,000 and I haven't spent $20,000, I've only spent $15,000, then I need to be honest and pay taxes on the $5,000 I didn't spend. So you're kind of just guesstimating. But then you're not having to pay taxes. Let's say it's $20,000. You're not having to pay taxes on that $20,000. So again, it's reducing your taxable income. So it's a huge benefit for people if they've never had a housing allowance before and they are a licensed minister, which a lot of missionaries are, to be able to, get a benefit there. So let's talk about Social Security, because you mentioned that, Brooke, and I think it's worth talking about because that is a huge question for ministers, missionaries everywhere. If I can opt out of Social Security, should I? I mean, initially it sounds like, yes, it is more money. It's a no-brainer. Why might it be good? Why might it be not good?
We have this conversation a lot because, there are benefits to both sides of it. I think, if you do opt out, I think you have to be very disciplined and a unique individual to be able to save for your retirement yourself. I mean, you're not going to be probably not going to be collecting Social Security. I mean, there are instances where you still can, if you worked, out of the ministerial field and you have your credits paid in, you could still get your Social Security benefits. But if you're not paying in to the system, then you have to be disciplined and save for yourself and be able to, support yourself in your retirement. Not that Social Security is going to be able to support you fully, possibly, but that is a risk. If you opt out, you're not going to have that benefit later. That is something to very seriously consider, because there are a lot of people who would have good intentions to save for retirement, but life happens and expenses are hard sometimes. So, kind of, I think, sink into using that money that you should be setting aside. So it is a risk to opt out. But if you are a disciplined person and can save, you may be able to do better in your own saving for retirement than you would be getting in Social Security benefits later. So we just like to kind of tell our clients all the pluses and minuses of it and let them decide, or ask, and a lot of them ask a lot of questions and deliberate about it, but we don't really ever kind of go one way or the other. We just like to lay out the facts about it.
And it is. It's a huge risk that can have benefits, but it's a huge risk. I do think it's good for people to know that. I mean, I could even share from our personal experience when we were young. I know Danny, my husband, became a licensed minister, and we were like, oh my gosh, we are so broke. Yes, let's opt out of Social Security and get that extra income. And we did, and he didn't have his credits. So now moving back to the US, that's been one of our goals, is for him to get his 40 Social Security credits. Now, in my instance, I had worked enough years, and I was working part-time while we were still in Peru for a company back in the US. And I had worked enough that I had my 40 credits because I wasn't in a position to ever opt out. I was working for secular, normal companies. And so I got my credits, and now he's having to get his. And so we're kind of experiencing what that's like to not have your credits. And it's a little bit scary. Not that you rely on Social Security and people are saying, oh, it's not going to even be there. Okay. But to your point, Maggie, if you're not investing somewhere, at least Social Security is something that you have down the road.
Yeah.
So you said, like, be a very disciplined person. And I would even add to that, be a super disciplined person. You have to be a super disciplined person, because I cannot even tell you how many people I've heard who said, oh, I'm going to opt out of Social Security and I'll just invest that amount. And I feel like almost no one does. I mean, some do. The really investment type who just enjoy that whole process do. But most, it gets eaten up by the pressures of life, even that much more being on the mission field and you see need around you and you're like, God will take care of my future. I'm going to give this money now. And there are times that God might ask you to do that. But then there's also times where maybe he's not. Maybe he wants you to prepare for your future and help your kids out so they're not having to cover your future down the line. So when considering to opt out of Social Security, be really thoughtful on it. And you guys don't have to say it because you're so diplomatic. I'll just say, be honest. Like, I don't know if you should opt out of Social Security. Like, be cautious unless you are 100% convinced and it's set up to automatically withdraw and you're going to invest that, do it. And I know, like, at Modern Day, we offer an investment plan for missionaries, because we're passionate about them preparing for their future. So if you want to switch that over and open your investment plan, if you're a modern day missionary, do it. That's awesome. But if not, think about it. And then it's not just your money that you get down the line, but there's other things that come with Social Security as well. Like there's Medicare. Medicare is kind of a big deal.
You had said about like how Modern Day has a plan to help people plan for retirement. And I'm assuming that some of that is probably like taken out of their check before they get their check. Mm-hmm. And I think that that's a really good way to do it. I think when people do it that way, you get used to not having it. It doesn't even, it's just like a no-brainer. Yes. Just set it aside before you even get your paycheck or your stipend or whatever it is. Because then you just get used to not having it, and it puts you in a good discipline of putting that money aside on a regular basis.
You're absolutely right. When you don't see it, I feel like that's the best way to do it. So yeah. I thought of something else to kind of add to what we said about Medicare and the Social Security income that you get. But that would be if a spouse is like disabled or dies, you get survivor benefits. Or some type of disability benefits. And you also don't qualify for those if you haven't put in enough work credits. So here would be another one. I was talking to one of our missionaries, Trisha Hester, who gave some phenomenal advice to married couples who are on the field. Well, that 1099 is usually issued to one of the people. Mm-hmm. So one of the people, if you don't opt out of Social Security, you are gaining your credits. But the other spouse is not. So let's say that you've been on the field for 20 years, 30 years, 40 years, I don't even know, however many years, even 10, and you move back and only one of you has ever gotten that 1099, that other person has not been accruing any credits if somebody were to pass away, which, hey, that can happen. We're missionaries. We put ourselves in harm's way. I mean, it can really affect your spouse. So as an individual, as a couple, It might even be useful to say, hey, let's have one of us get the 1099 one year, and then the other one, the 1099 the other year, and go back and forth so that there is variability in the income. What other suggestions might you guys make? Would you guys make regarding that?
Well, or even, I don't know if each organization is different, if they could split it between the two
There you
spouses,
go.
if they're both, doing the missionary work. I think that would definitely be beneficial for the reasons that you said. I mean, if only one spouse is getting the income, the other one's kind of just dropped off the Social Security. I don't know what it's called when you're accruing, I guess, accruing credit, dropped off that completely. So, and if you're there for 10, 15, 20 years, that can be detrimental if you're coming back and you're maybe at an age where you're not going to be working anymore and not able to earn the credits. It would be a good idea to look into if the organization can split that between, and maybe it is a situation where some organizations would want to do it for one spouse one year and then the next year do the other spouse. I don't know if that is a factor or something that organizations don't like to do, splitting, but if they can, I think that's a good way to do it. And then you can
That's a great idea.
In tracking expenses, you could just split the expenses between the two as well.
Absolutely. And I would say that's important. And I'll just say this as a woman for, spouses who are listening. Oftentimes it's just kind of a cultural default thing. We'll just automatically assign that income to the husband, to the man. And it can be really detrimental to the woman going forward. Because you want to make sure that you're set up as a couple, but you want to make sure that you're set up as individuals. And both of you being strong as individuals benefits you both as a couple. So really talk to your organization. I know at Modern Day we are able to do that because we've had missionaries reach out. And it's important to us that both the man and the women are well taken care of. We care about all of our missionaries, not just one. So as a couple, have that conversation together and make sure if you're a man who's listening and you've got a wife, make sure that she is set up as well. And again, it's the survivor benefits, it's the disability, it's a lot more than even just the credits. So think that through as well. What does that look like?
It can also affect even like coming back if you need to borrow money for anything. You have no income history for one of the spouses if there's been no income. So it can affect other areas and not just Social Security.
You are absolutely right. I spoke with a missionary who mentioned that and said she could not get out a loan. She said a college student would have had an easier time getting out a loan than me because she didn't have any income history and also didn't have her credit score had just kind of tanked because she hadn't been using a credit card. So one thing that I know we've done is we always had a credit card that didn't have a foreign fee, and we put some things on it, always paid it off immediately. Like you charged it, you paid it off the same day, but it kind of helped us maintain a decent credit score for when we came back as well. So yeah, lots of things to think about, but sometimes when we're on the field, we can forget that there's a life afterward. And whether you stay on the field until you are 80 or until you die there, or you come back early, you don't know. We can have our plans, but we don't know what God's plan is. And so it's good to think about life there, but it is also good to think about what if God were to call you back. How can you set things up for yourselves and also for your children? Because if not, your children will also pay a price for things like that. So, okay, well, you guys, we have talked about a lot today, and I'm sure people's heads are spinning a little bit. And the idea was not to answer every question that everyone has, but it was to get them thinking in the right direction. So for any questions that you have, there are professionals like Maggie and Brooke. You could reach out to them. They can do your taxes, and they're awesome. On that note, how can people reach out to you if they would like you to do their taxes?
Well, they can reach us via email or call. My email is Maggie, Maggie, at B as in boy, D as in David, M as in Mary, Texas spelled out.com. And Brooke's is the same, just BROOKE at
Perfect.
bdntexas.com. We would love the opportunity to talk to anybody that has questions and help in this area. This is a really boring area for a lot of people, but we really like it. So
Well, thank you. And we know that like doing missionary taxes is not probably the most lucrative choice as tax preparers. So thank you for what you do, because it's a really, really, really big deal.
Oh, well, thank you. We really appreciate you letting us share about this topic and trying to make it fun.
Yes, it was great. So fun. I mean, it's like a party over here, talking taxes, talking money.
That's
And we
right.
will make sure to post some resources and some links where people can do a little bit of research on their own. But again, reach out and find a professional if you need any help with any of this. That is our heart at Modern Day, that you are thriving in all areas of life. And this would be one of them, in your finances, in your ability to take care of yourself while you're on the field, and in thinking about what God might have for your future. So thank you for joining us today, Maggie and Brooke, and all of our missionaries. We will see you soon on our next episode.
All right. Thank you.
All right, thank you.